Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 14th, 2025, and we're diving into Ibotta's recently released second quarter 2025 financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ibotta, a leader in digital promotions for CPG brands, has just released their Q2 2025 earnings report, and there's a lot to unpack, from revenue declines to strategic shifts in their business model.
Revenue and profitability overview. Let's start with the top line. Ibotta reported a revenue of $86 million for Q2 2025, which is a 2% decrease year over year. Despite this, the company managed to generate a net income of $2.5 million. John, can you elaborate on these figures?
Absolutely. While the revenue saw a slight decline, Ibotta's profitability metrics are quite strong. The net income of $2.5 million represents 3% of their revenue, and their adjusted EBITDA came in at $17.9 million, reflecting a 21% margin. This indicates that Ibotta is managing its costs effectively, even in a challenging revenue environment.
And what about their cash flow?
They generated $25.9 million in cash from operating activities and $18.9 million in free cash flow, which is a positive sign of their operational efficiency and financial health.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 18 cents for Ibotta based on a survey of 2 analysts. However, the actual adjusted EPS came in at 49 cents. John, what does this tell us?
This is a significant beat on the EPS front. The actual adjusted EPS of 49 cents far exceeds the forecasted 18 cents, indicating that Ibotta has outperformed expectations. This could be attributed to their effective cost management and operational efficiencies, which have bolstered their bottom line despite the revenue decline.
Strategic initiatives and market expansion. Moving on to strategic initiatives, Ibotta saw a 27% year-over-year growth in redeemers. What were the key drivers behind this growth?
The growth in redeemers was primarily driven by the launch of Instacart in Q4 2024 and the partial launch of DoorDash. These partnerships have expanded Ibotta's reach and allowed them to tap into new customer bases, significantly boosting their redeemer numbers.
It seems like these strategic partnerships are paying off. How do you see this impacting their future growth?
These partnerships are crucial for Ibotta's growth strategy. By integrating with major platforms like Instacart and DoorDash, Ibotta is positioning itself to capture a larger share of the digital promotions market, which should support their growth trajectory moving forward.
Leadership and future outlook. Let's talk about leadership changes and future outlook. Ibotta recently appointed Matt Puckett as their new CFO. How might this impact the company?
Matt Puckett's appointment as CFO is a strategic move as Ibotta enters its next phase of growth. His leadership is expected to bring fresh perspectives and drive financial strategies that align with their long-term goals.
And what about their guidance for the next quarter?
For Q3 2025, Ibotta has provided a revenue guidance of $79 million to $84 million, which represents a year-over-year decrease of 17% at the midpoint. This cautious outlook reflects the challenges they anticipate in the near term, but with their strategic initiatives, they are well-positioned to navigate these challenges.
Key takeaways. In summary, Ibotta's Q2 2025 results show a company that is effectively managing its operations despite a slight revenue decline. With a strong EPS beat and strategic partnerships driving growth, Ibotta is well-positioned for future success. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Ibotta's performance.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ibotta's performance in the comments below. Until next time.